Ladies and gentlemen, welcome to the third episode of DecenTalks. I'm here with Riley and my name is Carter. Today we're going to focus on the subject of market capitalization and why it's really important in cryptocurrency compared to other traditional industries, Market capitalization, just to put it simply, is the price of an asset, in this case, let's say Bitcoin, one Bitcoin, multiplied by the number of that asset in supply. So in this case, 21 million. And tonight is a cool, relaxing Friday night for short sellers because the price of Bitcoin is currently in a bit of a free fall, hovering around 36,600 US at the time of shooting. And so for everybody else, it's a bit of a red Friday, wouldn't you say, Riley?
Oh, it had definitely quite a bit of a drop in it. I think it really took a lot of people by surprise too that we saw this downturn recently, right? Like, I don't know, like last year especially when the ETF was going out, the futures ETF back in October, everyone's like, oh, it's going to 100,000. You had me, I was like, oh, it's going to 200,000 this year. But
a lot of optimism for sure.
A lot of optimism, but yeah, then recently there's been a huge sell-off, and talking about market cap, like Bitcoin's market cap now is that 700 billion, I think?
700, 800 billion, which is of course, a drop from the 1.1 trillion, 1.2 trillion that it was, even just a few weeks ago.
Yeah.
So, how can Bitcoin lose 1.2 or how can Bitcoin lose like 500 billion dollars $500 billion in just a few days, right?
Or it wasn't a few days, a few weeks probably.
A few weeks.
For that much.
For that much probably.
It was at least a few weeks,
but
almost
still,
a month or so.
A few weeks.
Yeah.
Right? How can that possibly happen, right? Well, that's why the price moves up and down tends to have to do with lots of different factors like stock market prices, investor sentiment, news, all those things. But a small change in the price over the course of a large supply can have a really big impact on the market cap, right? And that's why market cap is so important to understand, because it can give perspective to how a cryptocurrency or any asset is doing, how big it is, how important it is, or how mature that project is in comparison to everything else, right? So, Bitcoin's market cap is enormous, right? It's the largest in cryptocurrency by a very significant margin. Riley, do you know how much the Ethereum market cap is?
Oh, definitely. I think with the recent drawdown, it's probably 320 billion. But it got up to, I think it was at least half a trillion, 500 billion, I think, at one point.
Yeah, that's exactly right.
Yeah,
that's exactly right. And so Ethereum, which we often think of as being like a very strong competitor to Bitcoin, one that is like nipping at its heels kind of thing, is still like significantly less than half of the Bitcoin market cap in value, right? And there are many people, myself included, who kind of believe that Ethereum will overtake Bitcoin one day in market cap, but it still clearly has a long way to go. And it's the closest thing that even has a shot at overtaking Bitcoin.
There's some factors that we can talk about of why that could happen, right? Like we can talk about how tokens are locked up into the new network. Mm-hmm. Those can't be moved around, right?
Yeah, staking and the proof of stake. Once the beacon chain merges and you have the proof of stake protocol come into effect, and all like I was saying, all the tokens that get locked up in that, they're taken out of circulating supply, right? And so that has a pretty positive impact on price and therefore as well on market capitalization.
Because market capitalization is really showing the price of if all coins were there and all coins were available. But that's not the case though. That's something that people have to understand, is that a lot of these, or not a lot, but there's a good percentage, I think it's at least 10% for Bitcoin, that are lost forever. You can never get those back.
Yes.
But that's still accounted in the market cap. So.
Mm-hmm. Exactly. And market cap is based on price. Right? It's based on the price that it is trading at. And the trading price is determined on exchanges when people are buying and selling crypto, right? But not all the crypto is on the exchanges. In fact, most crypto is generally off exchanges in people's wallets, on DeFi platforms, in staking, in all kinds of other places. So what this means is that it doesn't take very much of the crypto moving around, right? It's just the crypto that's on exchanges to determine the price and the market cap for the whole industry, right? So, if a really big change happens to that small amount of coins that are on the exchanges, it means that the market cap is going to fluctuate wildly. So you might be tempted to think that market cap isn't a very good indicator of value because, well, if a few whales can manipulate a small cryptocurrency's market cap by kind of like if I sell a Bitcoin to you for $1, right? A whole Bitcoin.
That's a great deal.
Yeah, exactly. Let's say that me and Riley worked out a deal where I'm going to sell him one whole Bitcoin for $1.
I would gladly take that.
Of course, I'm sure you would.
Would you sell me that?
No. No. But what this means is then for that brief moment of time until more transactions happen, for that brief moment of time, Bitcoin's market cap is $21 million.
No, but would it though? Because wouldn't the
This is 21 million coins. I've sold you one for $1. Therefore, the price of a Bitcoin is $1. Multiplied across 21 million Bitcoins, meaning that for that brief moment of time, Bitcoin is the market capitalization of Bitcoin could be said to be $21 million. Now, realistically, we would never actually achieve such a thing because it would require the price of Bitcoin crashing from $36,000 to $1. It's not happening.
That's a fire sale though. If it does get to $1, I would load up on a few.
Of course. But that's market capitalization. So what does this mean for the average user? Well, if you're going to buy Dogelon, Mars, Floki, whatever, all these, if you're going to buy like really obscure small micro cap, as they say, cryptocurrencies, and they are manipulated, you might think that seeing a large market cap on one crypto means that it's a mature and reasonable project. But if there's lots of price manipulation going on, it may not be a mature project, right?
Yeah, and then one thing too, I guess as well, like if the market cap's bigger, the chances of it being manipulated gets tougher too as well.
Exactly.
That's another thing as well.
In general.
Yeah. In general, yeah.
Yeah. Yeah, in general, if it's a larger market cap, it's generally more secure, more established, less manipulation prone, but it is never a guarantee. So that's why things like trading volume and all this other stuff come into play. So, you're thinking, oh gosh, well, if I want to invest in this cryptocurrency, I have to not only check the price, but also the market cap, also the trading volume, what exchanges it's offered on. Oh my gosh. If that sounds like a lot of work, that's because it is. It is a lot of work to do all that research. And that's the kind of research that you need to do if you're going to invest in really risky projects. You don't really have to think very much about the trading volume of Bitcoin or Ethereum, right? You can just buy them, and it's a pretty safe investment as far as crypto goes, right? You don't have to do as much research because it's less risky. The risky assets require a lot more thought and patience. Wouldn't you agree?
Oh, definitely. If you want to get into something, there's, I don't know, is there 10,000 cryptocurrencies now, I think, or
Probably
over that?
More.
Over
Probably
that, right?
More now.
So like, I guess if you're gonna go find a crypto that's ranked 3,000, if maybe $1 million market cap, if that, it's got to be a very good project with a solid team behind it and has a good purpose and a use case with utility. So I think that's very important.
Is that so? Is that like your process for when you're going to buy a new crypto? Like when you buy a new crypto, right, a brand new token, how do you personally evaluate it?
I think just based on this episode, to keep it focused on market capitalization, like just maybe really looking at, okay, like how many tokens are there in supply? Like where are those tokens? What is the distribution rate of those tokens? Like the inflation rate? How much do those get produced every year? And based off that, like how many, I don't know, is there large entities that are holding, most of these tokens? That's usually a bad sign.
Like whales.
Yeah,
Right?
so you don't want them pumping and dumping the whole thing, right?
No, of course.
But if it's, so those things are important to look at. Like, how about you? Like, what are some things you look at for?
I think I'd agree with a lot of what you're saying. I think I too would. You're thinking about the team. You're thinking about if there's whales and stuff. Some of that stuff can be harder to check because some of them are very good at hiding their presence on the chain. But generally speaking, if it smells fishy, it probably is, right? If you have to go to a really obscure exchange, right? If you have to convert to another token first before you can buy it, if if there's any part of it that seems a little weird or suspicious, then it generally is a red flag. Like, most mature crypto projects will make it very easy for you to both buy but also to sell. Okay, that's the key, right? There are a lot of scams out there where they make it impossible to sell.
Like, we can bring one up. The squid. It's called the Squid Token, right, or Squid Coin?
Yeah, Squid Game. It was back when Squid Game came out, right? And it was all the hotness and stuff. There was that Squid Game token that got launched, right? Do you remember what happened with that?
Oh, so basically, like, it was only traded on PancakeSwap, right? I'm pretty sure. Yeah. So like, it's not even like it's being traded on a decentralized exchange. Not even on any centralized exchanges had them, right?
Yeah.
So really, what people had the problem with was you could buy it, but you can't sell it.
Exactly. You could not sell ever, and that is a humongous red flag.
The market cap went up a lot because no one was able to sell. So the amount of
you can only buy.
Exactly, you can only buy. So the amount of coins in circulation for buying kept getting smaller and smaller, so the price went up.
Now, this is also market capitalization is also why Shiba Inu became popular, why it became really successful, is for the simple reason that human beings succumb to our sort of animal brains, and for many people who don't understand how market capitalization works, Shiba Inu seems really attractive because consider this scenario, okay, right? Consider this scenario. You can either, for let's say $100, right? Let's say for $100, you can either own 0.00001 of a Bitcoin, right? Or you can own like 100 million Shiba Inu, right? 100 million SHIB. Now, if you are a brand new crypto investor, which would you rather pick?
Oh, like definitely getting the 100 million because if it goes to
100 million is higher than 0.001.
But if it goes to $1, you'd be multi-millionaire.
Yeah, you'd be raking in the billions, right? If Shiba Inu if it would just get to $1.
And people talk about that. They're like, "Oh, it's gonna go to $1, so it must, right?"
If people would just believe in Shiba, then it would get to $1.
And that doesn't seem like a unrealistic goal, right? At $1, for the coin.
Let's not talk about the fact that Shiba Inu has a quadrillion tokens, right? Or at least they did it one time. I think actually they had some quadrillion tokens or whatever, and then sent a bunch to Vitalik. Vitalik donated a bunch and then burned the rest. He sold the rest.
Did he sell? I thought he burnt. No, I thought he burnt them.
He burnt some tokens that he got in his.
Oh, okay, yeah.
Anyway, it has an enormous supply. So it could not possibly get to $1. If they had even a quadrillion tokens, and then each one was worth $1, that's $1 quadrillion, and we do not have a way to access that kind of money on the planet, right?
Yeah.
So it just isn't possible, right? It's not possible, and but for people who don't understand market cap, they believe that they're getting in really early on it because people have been hearing for years stories about people who got really early on Dogecoin, people who got really early on Bitcoin and Ethereum, and then made like millions off of it, right? They make millions off of it, and then they're in the news, right? And everyone wants that. They want to get rich quick. And so they view Shiba Inu with its 0.001 price tag, and then the ability to buy millions of it, right, at a time. They think of themselves as being like, very early adopters to this project, right? Not understanding that Shiba Inu simply cannot get right to $1 or even a cent. It can't even get to 1/10 of a cent, right?
Right.
Not realistically, right?
Yeah.
And if it were to approach something like that, it would be flipping Bitcoin, it would be flipping gold, it would be flipping like all the precious metals in many Fortune 500 companies, which for Shiba Inu isn't likely. If Shiba Inu could do that, you would think that Bitcoin and Ethereum would have done it first, right?
True, right? And I remember you mentioning, Carter, you had a good website. I forget the name of it that you go to. That you can compare. You can compare to the different cryptos and what it would take to overtake, right?
I am so glad you brought that up. That wasn't in our notes. That is a site called Crypto Scenarios. Okay, Crypto Scenarios. And so what that website will do is it will let you put in one crypto, and then it'll put it to examine. And so then it'll let you put in another crypto to compare the market caps to, right? So I could put in, like, what if Cardano had Bitcoin's market cap, right? And then it will give me the price of Cardano if it had the same market cap, right? The same sort of sum value as Bitcoin does, right? And that's useful for imagining what it would be like if Cardano were to become more valuable than Bitcoin, right? And so then in that case, you know, you're looking at a price tag of about like $15 to $20 per ADA, right?
That sounds reasonable, but when you put it in perspective, though, it's like, oh, that's
exactly. But that's when. So it's really, it's definitely an exercise for your brain to get over the fact that at say $20, Cardano would be worth more than Bitcoin. But you think to yourself, but how can that be? Bitcoin is worth like $50,000, $60,000, $30,000, and then Cardano is $20. But how is it worth more if it's individually worth less? And that's because they have different supplies, right? Cardano has a lot more tokens in supply than Bitcoin does. But if each token were to reach that amount, then the total value of them, the market capitalization, would be higher.
That's very true.
That's,
Market capitalization.
That's right.
Yeah.
And so you get over that human nature, right? I think it's human nature, right, to want more of a thing rather than less.
It seems a lot more like, yeah, if this gets to like this price level, you know, this seems really good.
It's like, I have 100 million sheep, right? I'm rich, but you're not really. But it feels like it is, right? Much more so than some tiny decimal point of a Bitcoin, right? And so you know, what is the solution to that? What's the, like, what do we do about this sort of cognitive blocker that people have with owning such a tiny decimal of a Bitcoin?
I guess I remember you brought this up. You got to like really break them down into satoshis. You know, that's
right.
what one satoshi is 100 millionth millionth of a Bitcoin.
Right.
So if we can break it down into that, and I think right now, if Bitcoin gets to 100,000, one satoshi is equal to one. Is it 1 cent or no? It's 0.
1 sat is 1 cent. So 100 sats would be $1.
Oh, so
$1 million.
If it goes to 1 million, then 1 sat is 1 cent.
Yes.
Oh, okay, yeah. So if we have a $1 million Bitcoin, which could be possible, one day.
It's like it's like the pie in the sky, the goal, the long-term vision, right, for Bitcoin. Yeah, exactly.
Yeah, so like satoshis could be like, if you look at it in satoshis, like, oh, like you have 20 million satoshis. Like, well, it actually doesn't sound too bad now, right?
Exactly, and I definitely think of that sometimes when I'm dealing with my own Bitcoin. I'm kind of thinking, oh yes, I have 500,000 satoshis in this wallet, and yes, I have another 50,000 satoshis over here. You see, I feel a lot more sophisticated and a lot richer that way, right? And then when you think to yourself, well, okay, well, one day 100 sats will be $1. So if you have 500,000 sats, that's like, how much math? 500,000 sats. That's $5,000.
$5,000.
$5,000.
Yeah.
Right? That's not bad, hey. So it's kind of convenient to think of things like that. And then you think of like, okay, so one Canadian dollar now is probably worth, well, with the drop, it's probably worth like what, 1,300 sats probably. 1,200 sats. It was 1,600 back at like 50 to 60K. So
okay, yeah.
Probably like, so it's probably like 1,200 sats, right, for a Canadian dollar.
Right. And then also just looking at it too, like when you're going to like, let's say Bitcoin does become a means of payment as well, right?
Sure.
Like you don't want to be like, oh, this will cost you 0.0000001 Bitcoin.
Yeah, it's too hard for your brain to imagine that many decimal places, being that small. It's too hard.
And it's a lot cleaner if you just go, okay, it's gonna be 12 satoshis.
Yeah. Well,
okay, 12 satoshis.
It's gonna be 500 sats, right? You go to Starbucks, you buy a coffee for 500 sats.
Exactly.
Easy,
Yeah.
Right. Super easy.
Yeah. So it makes it a lot more. It just really breaks it down. It's like the pennies to the dollar,
Yeah, exactly. And,
yeah.
And the unit that they've been using has changed over time. Like I wasn't around for this, but back in 2014 and stuff, right? They were talking about an era when they would be using micro bitcoins as like your standard unit. So satoshis were still far too small to comprehend on the other end, right? So you're thinking, okay, well, coffee might be like 10 microsats, right? And a microsat being 1,000th of a Bitcoin, right? Now that's still a microsize or a micro Bitcoin is still quite a bit of money, right? So it's like $100 or something, a few $100 maybe. But that number has changed. So we kind of stopped thinking of things in micro Bitcoins, and now it's just in satoshis, raw sats, right?
And big question is, if Bitcoin keeps going up in price, is it possible you can even break down the Satoshi even further down?
Well, that sounds a lot like a Lightning Network question.
Yeah, it's a Lightning
And
Network
you,
question. Yeah.
sir, are the resident expert on that here.
Oh, I don't know if I'm the expert. I know a little bit, but
Listen, he's incredibly intelligent and knows everything there is to know about the Lightning Network. Isn't that right?
Not everything, no.
Sure.
Not everything. I just know that you can, on the Lightning Network, you can break it down. You can even break down the satoshis to a lower level. So like if Bitcoin does become more and more valuable, you can send even more and more like micro payment or exact amounts, which is kind of cool.
And that kind of solves the issue of like, because people ask sometimes, well, if people are losing their Bitcoins, won't we run out one day?
Oh, if they lose like their Bitcoins forever?
Well, yeah. So like people say, well, if there's no new Bitcoins being added after 21 million, right? And people will over time lose some Bitcoins, right? And the supply gets smaller and smaller and smaller. People say, won't we eventually run out and not have enough BTC to do transactions with? Well, if you can keep dividing them down into satoshis, which honestly it would take quite a lot of lost Bitcoin to make satoshis, infeasible. But say that does happen, then yeah, like you're saying with the Lightning Network, you break them down infinitely, then there will always be enough supply to be doing transactions with. We just move the decimals down, right?
And the creator of Bitcoin, I remember there's a forum post, like the Satoshi he made, like, or whoever it is, they made a post saying like you're donating to the network basically if you lose your coins or so. Wasn't there a post or something? Did you see that?
Yeah, I mean I've heard of it.
Yeah.
I've heard of it. Whereas it's like if someone loses their coins, then everyone else benefits from it, right? It's your investment, your stack gets a little bit more valuable, right? And same thing goes for other cryptocurrencies that have limited supplies too. It's not just limited to Bitcoin, right?
That's very true, yeah. But Bitcoin really acts as that like store of value, so like it's a scarce asset, and so if people lose their coins, you gotta make sure you know where you're storing your coins and how to store them properly.
Yeah.
But if you lose them, that's on you, right? As the blockchain doesn't lie, and it just that's how it is.
Yep. There's no forgot password for crypto, right? At least not right now.
There isn't. No.
But yeah, and you're right. The Bitcoin gets used as well in a lot of trading pairs, right? And it's kind of forming a status as a index, right? It's forming a status as like a price index. So a lot of trading pairs are done. So if you want to buy Ethereum, you can do Ethereum USD, right? So you buy your Ethereum with US dollars, but you can also buy it with Bitcoin. So you convert your Bitcoin into Ethereum directly. Now those charts are really useful because the thing is Bitcoin's market cap is so large, and it used to be even larger in comparison to Ethereum and the altcoins, that it actually, when Bitcoin's price moves a certain way, almost all other cryptocurrencies move in that direction as well. Now they might move more, they might move less, but they'll generally move in the same way. So when you look at all the charts in a big list against the US dollar, a lot of them look exactly the same on first glance, right? They don't look very different, do they?
Oh, in terms of all the cryptos go up at the same time or
yeah,
go down.
they all go up at the same time. They'll go down at the same time. Right?
Bitcoin's king, so if Bitcoin wants to go up or go down, everything usually follows. So.
And this is a concept called Bitcoin dominance.
Yes,
right?
yeah.
Because Bitcoin is said to dominate the cryptocurrency industry, and it traditionally has for many, many years.
Yeah.
And so that means that just having a Solana USD chart or a Dogecoin USD chart may not be very insightful, because all it's telling you is what the whole cryptocurrency market is doing at that time. What's more useful is to look at the Dogecoin Bitcoin chart so that you know how well Dogecoin is, or whatever cryptocurrency, how it's doing compared to Bitcoin. Because then you can see, okay, well, if Dogecoin Bitcoin remains pretty flat, then it means that Dogecoin hasn't actually changed in value. All that's changed is Bitcoin's value and cryptocurrency's value in general, right? Dogecoin as a choice has not gained or lost any value, right? But then if Bitcoin goes up and all the charts go up, you might go, wow, Dogecoin's going like up, that's crazy.
To the moon, to the moon.
But if Dogecoin is still flat, then, or going, even worse, if it's going down, if it's going down, then that means that you actually would be better off holding Bitcoin than holding Doge, even though they're both going up in dollar terms, right? Because in that case, Doge is going up slower than Bitcoin is.
It brings up an interesting point. Like usually in bull markets, altcoins really outperform Bitcoin.
Yes.
But the mistake that is made though is that when the bear market hits, or like some of these, the recent drawback that we're having right now, the altcoins get hit a lot harder than Bitcoin on these drawdowns too. So it's more risk. So you got higher reward, but higher losses possibly too with these altcoins.
Yeah, you know, if Bitcoin drops 10%, then Ethereum will drop 17%, and Dogecoin will drop like 20%, 30%.
Exactly.
Right?
Yeah.
And some coins die, right? It just happens, right? So it's a risk reward kind of scenario. And you know, the reason that you're investing in these altcoins is because you believe that over time they will outperform Bitcoin. And the only way you know if they're outperforming Bitcoin is if you're watching the Bitcoin evaluation of those cryptocurrencies. So that Dogecoin / BTC chart, right? That's the important one. And as Bitcoin's market cap changes and as the cryptocurrency industry matures, Bitcoin's dominance over the market starts to kind of reduce, right? They say that over time, the amount of dominance that Bitcoin has goes down, and you can actually plot that on a graph. There are graphs out there online that will show you Bitcoin dominance over time. And if Bitcoin dominance gets low, then what that means is the other cryptocurrencies will be acting more independent of Bitcoin. Their price action will be more tied to their own value, separate of whatever Bitcoin's doing. So Ethereum and Cardano in particular tend to have pretty good they tend to resist Bitcoin dominance really well, right? They're not immune, obviously, like every cryptocurrency is affected by Bitcoin in some way, but you know, if Bitcoin drops a lot, Cardano doesn't tend to drop as hard. Sometimes it does, obviously.
Sometimes it does.
It certainly is right now.
Yeah.
But, you know, especially these like proof of stake coins, when Bitcoin drops a lot, everyone wants to sell their coins, right? But in things like Cardano and soon to be Ethereum, if you have your coins staked, then you can't just pull them out to sell on an emotional whim right away, all right? It would be very expensive for you to do so.
Right.
Which means that less of them get put onto the market, less of them get sold, right? And in doing so, that actually provides a little bit of stability to the price. It means that it's not going to be as volatile as it would otherwise, right? So that helps, right? And at the same time, when Bitcoin does really well, if Bitcoin doesn't have very much dominance on the market, it means that everything else may not pump with it, right? Okay, Bitcoin's doing well, but we don't really care about that. Ethereum's just going to hold flat for a while, right? And so then you kind of go, well, this sucks, right? We missed the wave, right? We didn't catch the wave up. Everyone wants to catch the wave up and then skip the fall down.
To the moon. It's going to keep going up.
Obviously.
Yeah,
right?
yeah.
So that is something that, you know, that's like a fundamental force of the cryptocurrency industry, right?
And another big part to mention, as you said, like if there's less coins that need to be sold, there's a big issue that needs to be addressed as well. Is there enough liquidity? So like Bitcoin is provided, it has the most liquidity. Like if I think Tesla made a point where they sold 10% of what they had, so it's 150 million, I think, and they just sold it just to prove that the liquidity of Bitcoin is solid and that it didn't affect the price much. But if you did that on any of the smaller, it would, especially ones that maybe have smaller amounts on exchanges, like you're gonna see like the four, the four would come out and it just that'd be it. So
exactly.
Yeah.
Exactly. No, that's a very good point about liquidity and stuff, right? And then if you have better liquidity, you have lower spreads. You have lower spreads, it means it's cheaper for you to be doing transactions. It means that the whole process is more efficient, right? Your trades get executed sooner. It's just better for the market overall. And if it's better for that, then those savings can be passed on to consumers. So that means that you can then execute your trades cheaper. You might get benefits or perks for using one exchange over another. It means that there can be more exchanges in the market, right? You can have more exchanges if there's enough liquidity to support them all, right? And if there's more exchanges, that means more competition. more competition. You can see where I'm going with this. Like, it all
Yeah.
just builds on more
Yeah.
competition. You get more benefits, more perks, more cheaper fees, blah, blah, blah. It all adds up, right?
Right.
It just helps everything when there's more liquidity in general.
That's a very good point. Yeah, like this make, especially like for if you want to make it so it's a legit asset to invest in and to propose to people, it has to have that liquidity. So it's it's important part. So
Yeah, exactly. Yeah.
yeah, so it's important, very important.
So,
Do you want a bubbly?
yeah.
Okay, I'll get a bubbly. You continue.
This is the part in the show, folks, where I check my notes.
And we have bubblies too. But anyway, so if maybe more things we can talk about for the market cap is how maybe where we're at right now. Like you spoke on the dominance of Bitcoin. Like we should look at it in percentage terms. So like right now, isn't it like 30% of the overall crypto? Because the overall crypto market cap is roughly 2 trillion right now.
Yeah, exactly.
I think. Yeah.
Yeah. And, and that's the thing is Bitcoin has just such this scale that, like, Ethereum is less than half the value of Bitcoin in market cap, right?
Yeah.
And then the next best, crypto over time has typically been Binance Coin. They tend to hold the number 3rd spot for the most amount of time overall. Sometimes Solana and Cardano take that spot, but Binance Coin kind of holds it.
Yeah.
They are a third of Ethereum's value. So they're 1/8 the value of Bitcoin. And sometimes they've even been as low as 1/10 of Bitcoin's value, right? So that means you would need 3 coins of the same value as the 3rd place of Binance Coin just to equal Ethereum, right? And you need over 2 Ethereums to equal Bitcoin. So you could probably combine the next 8 or 9 or 10 cryptos on the list and still not achieve the market cap of Bitcoin.
Yeah, it kind of reminds me of that picture. There's like a picture, I don't know where it's found, but it shows like all the different coins and how big they are relative to each other. Mm-hmm. And like you say, you can probably maybe see the first 10 cryptos. But then after that, there's a part of it where they're so small that you can't read what it says.
Yeah. The size of altcoins are so tiny in comparison to Bitcoin and Ethereum. And it's very easy to get lost in that because when you're in crypto for long enough and you're reading about all these projects and stuff and how they're growing by 40%, they doubled their value in 2 weeks or whatever, they jumped up into the top 50 or whatever, right? You go, oh my god, right? It's such a big project, right? And they certainly feel like it when you're trading in NFTs or you're on DeFi or you're in Discord servers, you're engaging with that community. It feels really big and active and wild and stuff, right? And then you take a step back and you realize that all of that is still so tiny, right? And it's kind of mind-boggling. You have to kind of go, whoa, wait a minute. All these things that I'm assigning so much importance to aren't as important as I think they are, right? It's like, a speck of sand, on the planet, and the planet's just a tiny speck in the galaxy.
Yeah.
Right? Stuff like that.
That's a crazy thought. Yeah.
So, yeah, something like that.
But I think another thing for market cap too, it's like how big can how big can the overall market cap go? Like what's your prediction in terms of the whole crypto when it reaches, let's say, mass adoption? What would be the total market cap of the whole crypto industry?
I have no idea.
If you had to make a prediction, right? If you had to make one.
Okay, well.
Not financial advice.
So, it's tough to say because a lot of cryptocurrencies are acting like software projects, like tech projects, like startups. And, the software, the startups for software, like they're billions and billions of dollars in revenue and value and market cap on their own. Mm-hmm. So the actual currencies are probably limited to the money supplies of fiat currencies. So the dollar, the euro, the yen, the yuan, the RMB, all the fiat currencies around the world, the pound. They all have their own M2 money supplies, right? They all have their own money supply, and I I think only a few, if any, cryptocurrencies will be able to match that. The rest will have to find their own utility as software projects or as like sort of pseudo like companies.
Mm.
And that means that at that point, like, it's very hard to say what the whole crypto market cap will be because, what if Microsoft decides that they want to make a token? Is Microsoft a cryptocurrency company? No, but maybe they have one. So do we add Microsoft's token to our record of
True, right?
market caps for crypto? Is it really doing the same thing?
What's defined by it then, right? Yeah.
Exactly.
That's a good point. Yeah.
So do you think that private companies will, like big mega corporations, do you think that they're going to be making their own cryptocurrencies for different purposes? And if so, do you think it's a good thing or a bad thing?
Like they'll make their own coin for like for whatever reason, like something that they can buy with or something they can trade with, or I think it's definitely possible. Like they make their own coin. Maybe it depends on what the value of it would be really in for, right? Is it for purchases for helping consumers get stuff, or is it for like some ways of like transferring data and like better use cases of just overall business structure? Like, what what are your thoughts on that? Like, I'm not really too sure. It's a bit of a tougher question, like for what private companies could do with it.
I mean, I think Amazon has mentioned something about it before, haven't they? Like they've mentioned they were hiring a blockchain person a while back, and that made the rounds of news and stuff. And
That-
actually did good for the crypto price too.
Yeah, I was just gonna say that price went up a little bit just based on the news. But didn't they deny it though? Didn't they say like,
Of
oh,
course,
yeah, yeah,
of course
yeah,
they
yeah.
would deny it. If it's not actually public or whatever, they're not ready. Then of course they'll deny it.
Yeah, that's true, right? Yeah. I think another big point we should bring up. Vugar brought up in the group chat the other day.
Yeah.
I think he's joking though. I don't think he thinks Tether is a good investment, but as a crypto investment. But that's an interesting part of market capitalization too.
Yeah,
That stable coin went up at least 20 times in the last year or two
Well, yeah.
or so. Yeah.
So for things like stable coins, right? How on earth do you evaluate a stable coin? Because a stable coin, you're not already aware, a stable coin is just a cryptocurrency that is pegged to the dollar. So its value is $1 and will always be $1, right? Why would you want this? Well, you want it so that you can do your transactions and your trades on a blockchain and not use the financial system. You get all the benefits of a cryptocurrency, of a digital blockchain without needing to be exposed to the volatility that comes with cryptocurrencies, right? You can, continue to have your investments in fiat and stuff, right? And do all that, yet get all the benefits of a blockchain. And so it ends up being very useful for exchanges, for swaps, for investing, for pulling out of crypto. It's very easy to pull out of crypto by buying Tether and converting into stable coins than it is to convert into US dollars and then pull those US dollars out, right? Because in that case, tax laws get very confusing around stable coins.
Yeah. True. Yeah.
But then the question comes: if all stable coins are worth $1, how do you tell which one is worth more than the other? How do you know which stablecoin is more successful, more mature than the other? Well, that's where market capitalization comes in again.
But does it? I guess there's like if you look at USDC versus USDT, like so Tether acts more as a fractional banking reserve, where they lend out a bit of what they have. They don't have it fully backed, but by looks of things, it doesn't look like it's 100% backed for where every one coin is equal to $1 in a reserve somewhere. While USDC, they say everything's back 1-to-1, so it's a direct. But like Tether acts more in a sense where they lend out a bit that what they have, but they have reserves up to like I don't know. I was hearing like 80% maybe or 90.
Yeah, I mean Tether was one of the first stable coins, right?
Yeah.
So because of that, they are the most successful. But the way that you measure which stable coin is better than the other actually is through market cap, the same way you would for regular projects. That is because the market cap, the supply of Tether, the supply of USDC, all those currencies, are not the same as the supply of all the real US dollars in all the actual like printed US dollars.
That'd be a problem if it was just
It
more.
would.
Yeah.
Because then it wouldn't be pegged to $1. So the only way that new Tether gets minted is when people trade in their real dollars to Tether the corporation, and then receive USDT in return. Like those USDT are minted and given to you in exchange for your dollars. And then when you want to swap them, when you want to redeem them, you just send them back to USD Tether. It gets burned, and then you get your dollars back. So supply of Tether really just has to do with how much US dollars have been put into the system. And if a stable coin becomes more successful, more stable coins are minted. They're all worth $1, but more get minted or less get minted, right? Some get burned, right? So that sort of fluctuation in supply is what gives you kind of this pecking order of stable coins, right? So obviously Tether was one of the first. It's on top, but USDC and Terra like TUSD, they're also very popular as well. And like Riley is alluding to, some of them have different structures behind the hood, right?
Yeah,
USD
exactly.
Tether is a very risky sort of fractional reserve system. And then you have others like DAI, right? Which DAI is a stable coin that is it's more collateral based. So in that case, you're not depositing US dollars, you're depositing Ethereum, right? And that gets locked up. And it gets its peg not from having US dollars stored in a treasury somewhere waiting to be one day redeemed. It's all about trading and price information, such that, if Ethereum were to move in value, the value of the DAI will adjust accordingly, and it will keep itself pegged to $1 based on the amount of Ethereum that is deposited into the contracts. It gets kind of complex, but all you really need to know is that it's trustless. It's just code. There's no treasury, no Fort Knox anywhere holding people's US dollars, okay? It's all algorithms. And in my opinion, that's probably the more healthy way to go about things. I think it's less. You don't have to trust Tether, the company, as much. You also don't have to trust Circle, the company behind USDC, as much, right? Although I'm not as familiar on how USDC works. Do you know very much about them?
USDC is pegged 1-to-1. That's what I've heard.
Of
Like
course.
that's the big
coin.
as a stable coin, but that's basically most of what I know for it.
Yeah, I mean, they work with Coinbase. They work with Coinbase a lot. They're very close relations with them, and so when you do trades on Coinbase, you don't actually have access to. Can you do Tether on Coinbase? I don't think so.
I don't know.
You have to do USDC.
Which one would you use? Would you use Tether or would you use?
Well, here's the thing, right? So USDC is better than Tether, in my opinion. They have a bit more transparent operations. They're still they still do the system where they take coins and then they store them, but they're a little bit more honest about it, and they are a little bit more transparent on their funds, and they hold more cash. Generally, I'm pretty sure they've made some kind of everything is backed 1-to-1 kind of guarantee. But if the currency that you want, because USDT is just more accepted, there are more trading pairs for it. So if you want to buy some random coin, it might only have a USDT pairing, right? It might not even have a Bitcoin pairing, right? It might not even have XYZ Bitcoin. It might only have XYZ USDT, right? Or XYZ Ethereum if it's an ERC20, right? Or BNB if it's a BEP20. So, there are some benefits to USDT in that it was first, it's most accepted. But is it a bad habit? Is it a crutch that I think as the crypto industry we need to move past? Absolutely.
And then the size of it's gotten pretty big, and that's causing some concerns with.
Sure.
It's 84. Is it 80? Is it 78 billion right now or something?
It's 80 billion. Yeah.
$80 billion US dollars. That's pretty big,
If Tether were to someday pack up their money in a briefcase and fly away in a helicopter, if they were to just run with the money, or they get sued and they lose all investor funds, or they get hacked or something. If Tether were to fall, cryptocurrency would crash into crypto winter, full bear market, full all the way down to the bottom kind of thing, right? Because the cryptocurrency really depends on these stable coins to be liquid, to add that all important liquidity we were mentioning, right? And the market cap of those stable coins gets added to the whole cryptocurrency market cap, right? It's a part of it. It's a part of the ecosystem, right? And so it's a very important part of the ecosystem.
Yeah, that's a really good point, and just like just how all that works, and I lost my train of thought, but I keep going.
I think we're getting towards the end of our show.
Yeah.
You know, what with all the news and stuff going on, I think it's time to maybe make the last couple predictions for the short term. You know, within the next couple weeks or so for our next episode. What do you think is in store for us, Riley?
Oh, I don't know. Honestly, there's a lot of I thought the low for the year would be 38,500, but we broke right through that. So I don't know how low we're gonna go here. You know, how low will it go?
And then where do you think it recovers? Where do you think it starts to come back up again?
Well, it's a hard question, right? Like I can't. Hopefully 30,000, like the previous low from last summer. But I don't know, like, what do you think?
I actually agree with that. I think, you know, we could see a dip below 30,000, right? I thought we were gonna get this like a week or so ago when we had a pretty big dip down from 50K. We went from 50K down to about 41. I thought we were gonna go to where we are now in the mid 30s. So maybe I'm a little too bearish. Maybe we'll sort of hover around 31, 32, and then, you know, in a month or so we'll go all the way down to 20. But I mean, obviously, given that this year we have seen 69K, right? We've seen it. It exists. I find it very hard to believe that we'll get all the way down to 20K. Like,
that's a big drop. Like you gotta look at
that far. That is the bear market.
Like
right?
we're already like in the middle of it. If it went that far down.
At that point, and then you go, okay, are we in for a crypto winter? Do we have to wait for like 5 years, 4 years?
Right. Yeah.
Well, because the next halving will happen in 2024, so we're probably about 2 years out from that.
From the halving, but then it takes a few months, at least for the supply shock to kick in from the halving.
It takes a little bit longer for that to kick in, so we could still be a long time. And in that time, it's a real experience that I've never had to live through yet. You've lived through a bear market, but you weren't really.
I wasn't really. I kind of walked away and I just came back later on. Yeah. Hibernate when the bears come out. So.
That's right. And with that words of wisdom, we're gonna end our episode here today. Thank you so much for listening. I'm Carter. This is Riley.
I'm Riley, and have a decent time.
That's right. Bye bye now.
Decent time. Decence. That sounds weird. It's decent.